Hello everyone, welcome back. In this episode here, just an article. Not going to do a chart, but I think this is worthwhile here. Um, it's tax time for most individuals anyway. Um, so I've been talking to my accountant, and um, I guess I could call him my accountant. He's not my accountant, like I don't pay him full time. It's just during tax time. He's my accountant now. My CPA, whatever, my tax guy. So I have a lot of history with him. I've done other businesses, self-employed, kind of startup from the house and all that. So he kind of knows some of the things I've done. A lot of tax history. So when you build a tax history with someone, it's hard to leave or do anything, because they got your history. Anyways, so it just this episode's just I guess a tax episode for Bitcoin trade, and you'll see that the Internal Revenue Service is treating digital currencies as property for tax purposes. So that's the headline for this. More headlines. And what's funny was I just got off the phone with my accountant, I guess I'll call him, and I'll just call him my tax guy. My tax guy. So I got off the phone with him, and once you know, I look up the headlines, and this came up. And some of this stuff is a little eerie because it's some of the things I've been saying. Some of the words and everything. It's kind of weird. But anyways, that's cool. It works for me. And there it is. So I'm not going to go through everything. I think for people who want to know what this is all about, they should read it. But it talks about this and that, and what they were doing. But most importantly, I think you got to read the first of these at least. And what's interesting for me when I read this is mostly that it's here for federal tax purposes. So just for the purpose of federal tax, they're calling Bitcoin a property versus a currency. And they word it in a way that it might change in the future under currently applicable law. So, they word it in a way, they didn't say, just straight no. So, there's a lot of things here, good tidbits. I've done a lot of, not done, I've been filing my taxes, of course, but I've run across a lot of weird things. Letters from the IRS, stuff like that. And one thing I learned is you don't want to push your limits on some of this stuff, especially when it comes to taxes. It's they tend to count everything, and they'll hold it against you. If you owe them 15 cents, they will put in probably a couple $1,000s worth of manpower to get that 15 cents. That's how they are sometimes. It's kind of weird. And or whatever, the $15 or whatever it was. I think I had an issue. I paid them. They came back to me and said, "Oh yeah, you owe us another $15 or 15 cents." And they wrote me a letter for this. Someone had to type it up, write it. Whatever the case, something. There was some effort into doing it, and it wasn't really worth 15 cents, but they wanted 15 cents. So that's kind of my point. You don't want to push it too much with the IRS. But I do want to look at this because I want to see what my limitations are. So how I like to work with the IRS, in my perspective, in my head, is I want to see what the limitations are, not how far I can push the limits. So there's certain things, I like to push the limits on certain things, especially if they're really advantageous to me. Other things, I just want to work within some limitations, because there's no advantageous advantage for pushing any of these limits, if that makes sense. Anyways, I hope this helps for anybody who's really serious about Bitcoin trading, because this is something you're gonna have to deal with. And you know what? It's March 25th. I don't know what day tax day is, but for this to come out right now, I just got off the phone with my tax guy, and he's kind of stressing out a little bit because he's got things. They got a lot of deadlines. This is the worst time to put this out because I don't know. This is going to get stressful for some of the tax professionals. Anyways, I don't have to worry about it because I won't be filing any of this until next year. So at least this stuff coming out will give me really good guidelines. How I can plan on how I do my business, how I'm going to report, what am I going to keep track, stuff like that. Everybody should already know this. So anyways, this concludes this episode. That's all I really wanted to talk about. I think it's worth talking about. There's a whole bunch of other stuff, all good stuff. A lot of good stuff to read. It's not that bad. But it is worth reading because you'll see the limitations of what you can work with. So anyways, this concludes this episode, but well, let's just go over a quick chart. Why not? That's what you're all watching here for. Alright, so this is Bitstamp, and I'm using a very long time frame here, 6 hours. But if you look at it, it's really testing the resistance, and that's what it's been doing. Same thing with BitC. In some ways, different, as I mentioned, a different triangle in a way, but doing the same thing, is pushing up against this resistance and bouncing down, up and down. It's going to be bouncing up, down there. It's going to explode sometime, and there's the hard resistance. And so when I look at BitC and I see this, I'm thinking maybe there's a lot of room to burst up. The other one is, of course, this to break down and only go this far. So take a pick, up or down. And then this is Bitfin, and Bitfin is always showing a breakout, but you never know if it's really breaking out. So this is the real hard line here on Bitfin. So it always shows like it's breaking out, but let's see if it really breaks out. If it is, it should just go up really fast. And there's your limits on the bottom. And then same thing with Coinbase. Very similar. So that concludes this episode. Feel free to like, dislike, leave a comment, or even do a response. And stay tuned for the next episode. Bye.